to talk more about the performance. Mr. Sanjiv Goenka, the chairman at CESC, is with us. Mr. Goenka, thank you so much, sir, for joining us. Congratulations on good set of numbers once again. Can you run us through the quarterly performance and what were the factors which aided this substantial growth in the profitability?
Very simply put and very basically put, a 3% increase in sales and a 3% reduction in energy purchase from outside. These two factors contributed to a higher top line and a higher bottom line.
Right. Can you talk about the overall expansion plan for the year FY14? What is the capacity that you will be ending the year with, the completed capacity, operational capacity rather, that you will be ending the year with? How is the expansion going on track?
Well, our Chandrapur project will actually get hopefully fully commissioned before March. So we should end the year with about close to 1900 megawatts of capacity. Haldia should get commissioned by December of next year. So financial year 15 should end at about 2400 to 2500.
Mr. Goenka, hi, this is Bianca joining in as well. So you mentioned right at the start that there's been a 3% decline in the energy purchase cost. Wanted to get a sense of overall for the quarter, what has been the kind of power purchase cost for you?
You know, it's the number of units. Our PLFs were higher, so we could reduce the amount of energy we purchase from outside. And the cost of your own generation is always lower than the cost of power you purchase from outside. So that has led to a higher bottom line.
So can we ask you what the average plant load factor has been?
Yes, our average plant load factor for the quarter has been 97.1%.
Mr. Goenka, very soon you're going to complete a year of the Firstsource acquisition. Wanted to know how the quarter has been on that front, on track for profitable growth?
Yes, it has. It's been very satisfying. I think the company has grown reasonably. Margins have grown, bottom lines have grown, and I think financial year 14 should be a significant year for the company in terms of improvement and march forward, and it will lay the foundations for growth in financial year 15 and financial year 16. And we do expect to see significant growth coming. We are investing in this current quarter for contracts that we have won and revenues of which will start flowing in from the following quarter.
Wonderful to hear that, sir. The market, though, at some point in time, they earlier did have a little bit of worry about the large debt pile, but we understand that's been decreasing at a significant pace. A quick word on that front as well.
Well, I think, I am a very debt-averse person, and I hate sitting on piles of debt. I would rather pay down debt, and that is what we've been doing in Firstsource. And the debt is, I think, almost at 50% of what it was a year ago. And going forward, we will reduce it even further.
Right. Sir, coming back to Chandrapur, can you talk about I believe you have recently participated in PPAs floated by utilities, and apparently there were talks about Tamil Nadu State Electricity Boards and Tata Power in for signing part of the capacity on long-term basis. Any update on that?
Well, I think we won a 100 megawatt supply contract from Tangentco, which is a Tamil Nadu distribution company. And we are in dialogue at a very advanced stage with two other utilities. And if both these fructify, then our entire capacity would get tied up.
Any update on firm FSA with Coal India, sir?
I think, the process is on, but it just takes its own time.
Okay, I'm going to steer this conversation towards the Spencer side of the business, sir. Quick update on how business has been, same store sales, etc. And obviously, everyone wants to know if you're on track to break even in FY14. First quarter of FY15, if I'm not wrong.
Yeah, I think, let me just give you in a nutshell. I think sales or revenues per square foot this quarter were at 1363 compared to roughly about 1301 or so the same quarter last year. So I think that's a pretty significant jump. And in terms of bottom lines, we were at 69 rupees store level EBITDA positive compared to 50 rupees at the same period last year. 92 rupees is when we break even for the company as a whole. And September for us was 78 rupees. So I think we are inching close towards that, and we are hopeful that either in the fourth quarter of this year or the first quarter of the next financial year, we should be breaking even.
Good to hear. That's all the very best. Brief last word then. One tends to believe that over the next couple of quarters, we're likely to see perhaps the theme of consolidation across your businesses. So that would be a fair assumption?
Absolutely. And I think you will see cash flows are very healthy across businesses. Projects are nearing completion, so you will see this phase of expansion coming to an end, and cash flows from these projects now beginning to impact the balance sheet positively, I hope.
Wonderful. Thank you very much for the update, and thanks for your time, and congratulations on posting a good set of numbers for the quarter gone by. CESC stock at this point at 389. We'll take a short commercial break right now, but we'll be back to talk about what's moving the markets on the other side of the break.